the year-to-date trend has really been backed by a concern over affordability, rising rates, obviously, and then the home builders themselves have been pushing price pretty aggressively. And the concern in the market is obviously, the ability for the incremental buyer to afford that home will slow demand. The other problem is we've had a pretty thin inventory position on the existing side. So some of the weaker top line numbers we've seen year to date have actually can be explained by less inventory rather than less demand.
And when we talk about Toll Brothers, we're talking about really a sort of a niche player in this market. They only turn out a certain number of homes. They tend to be much more higher end. Is that a special case, or are there other stocks that you like in this group, and if so, for what reason?
I think what you're starting to see in the home builders is less consistency amongst the companies, or uniformity amongst the companies. What we're looking at now is individual operating business models, balance sheet health, that sort of thing. And the two parts of the market that we think are still pretty strong are that first-time, low-cost entry-level buyer, and then the upper end. I think where we've seen mixed results and mixed news is really on that trade-up buyer. I think that buyer is maybe more subjective, where a rise in rates may affect their decision to trade up. But I do think the barbell, if you will, the lower end entry level and the first or the higher end builder are both showing pretty strong trends. So along those lines, we like Toll, we like Horton on the entry level side, and we also like Lennar.